Hello everyone, I'm thrilled to be a Mint expert today on markets. Our finance minister gave us some historic announcements last week, and we saw where the markets rallied. India was going through three-pronged problems. The first was liquidity crisis, the second being crisis of confidence, and third, the global slowdown. RBI did enough and more on the rate cuts and the liquidity injection possible. I think the first problem is close to getting addressed and also having hopes that there'll be more rate cuts in the future. Second, crisis of confidence. I think Friday was the day where we saw a very big change in sentiment, where our finance minister went out and announced all the tax cuts. She is this is the first time she has thought global and brought us on the global map. Today we are at par with China when we say we'll pay 15 or 17% kind of tax for the new greenfield projects. When we'll pay 25% income tax, we are at par with the United States. And this unprecedented move has brought about so much positivity in the markets. The whole sentiment, the whole dull mood on the market and the street changed with that one single announcement. The third problem that I spoke that India was facing was global slowdown. Of course, I think first green shoots that we saw is some kind of peace talks between US and China. The first 400 items that are not going to be, the duty is not going to be levied is kind of panning out. And we want to believe that it will be more constructive from here on. When she announced that on Friday, it was a euphoria in the markets. There was a scramble to go out and buy. I think most people were running to cover their shorts because for the first 1 or 2% people didn't realize that how big an announcement it was, as it is the first time in the history of Indian capital markets. So Friday was a day of euphoria where we saw a 6% gain on indices and the foreigners running to cover shorts. In the weekend was the only time that most fund houses were working, most capital markets players were working, and some sanity returned to the markets, given people had time to do some analysis that which sectors, which stocks would actually benefit and which would not. Monday was a follow-up buying, given, as I told you, that the players that we are in touch with, many institutional investors, many high net worth individuals, many family offices kind of had a left out feeling and they went and bought. Today is the first day that we saw a cool off and a small sell figure when, after a 9% kind of a move in market in 2 days time, there's surely some money to be taken off the table. But the first sell figure from the foreigners of about 800 crores, I wouldn't read too much into it because it is a simple phenomenon where I could see that some kind of reverse arbitrage is happening. Most foreign funds have the MSCI inventory with them, and there was a lot of follow-up buying from the domestic mutual funds still deploying money, and foreigners were getting futures at index futures and the single stock futures at a cheaper price, which was a phenomenon of the sell figure explaining today. Going forward, I'm pretty constructive on the market for a simple reason. The sentiment has changed, and now that the spending will come back, we are pretty constructive on capital goods as a sector, engineering as a sector. I think large corporate banks will do very well from here on. Consumers will stand to benefit because I think most were in 30% plus kind of tax brackets. That sanity will return and the consumption will come back. So these three sectors is something that we are very pretty constructive on. Mid caps will kind of now outperform large caps. Is we want to believe that for a reason that I think they were battered out of proportion. A lot of this is already in the price, and you will see flurry of mid cap ideas in the market, which will which will be wealth creators in the years going forward. So these are the few sectors that we like. What we don't like is, and which have not participated, is I think IT and pharma. Barring Lupin, because I think Lupin paid 35% tax and it stands to benefit. But I think these are the two sectors that when beta starts performing, that these are the two sectors which will participate much later. You can look out for oil and gas space, which we are constructive on. Reliance saw participation yesterday. It was kind of leading the pack. I think OMCs along with Reliance Industries is something that you should look out. Given tomorrow is the derivatives expiry, we want to believe a lot of shorts will be out of the system. Many of them will not roll, and we could see fresh longs. So Friday could be another interesting day coming up. Happy investing. Thank you.